the global economy is navigating turbulent times. South Africa is facing fresh pressure as, of course, the US imposes new tariffs on some of its exports. Yet the Reserve Bank sees this as perhaps a moment to rethink inflation targets, boost long-term growth, and turn policy into real jobs and stability. At the center of this, the South African Reserve Bank, tasked with keeping prices stable and the financial system sound. We're joined now by the Governor, Lesetja Kganyago, to talk to us about how to navigate these uncertain times. Always a pleasure to have you on the show, and thank you for your time, Governor.
Good morning.
You obviously have to factor all sorts of pressures on the economy as you make your decisions. And let's start with perhaps one that is most noteworthy on people's lips at the moment, the reimposition of steep tariffs by the US on South African exports. 30% is the White House number from the 1st of August. Now, I know you don't set trade policy, but how do you assess the potential economic fallout, and where will the pain be most felt?
Bongani, the times are very uncertain, and you never know whether the level of the tariffs is fixed or whether the date that had been announced is the date that you would go with. Starting with our January meeting, we started assessing the impact on South Africa should AGOA not be renewed. And alongside AGOA not being renewed, we also made an assumption: what if the US imposes a 25% tariff on South Africa? And we found that it would have an adverse impact on our economy, albeit small. However, the impact that the tariffs would have on specific sectors is actually quite significant. The two sectors most affected by this are the automotive industry, which I had seen figures towards the end of last week, that South Africa's exports of motor vehicles to the US is down close to 82% 6 months to date compared to last year. That is actually very concerning. And again, it would not hit all the motor vehicle manufacturers, but motor vehicle manufacturers that have got a significant exposure to the US. The second sector is actually agriculture. And the impact in the agriculture could actually be quite devastating, because agriculture employs a lot of low-skilled workers. And here, the impact is on the citrus fruit, table grapes, and wines. And by some measures, if we do not find alternative measures, the impact on jobs could be around 100,000. So that is what we actually face.
Quite significant job losses there if they come to fruition. Now, I mentioned the lowering of the inflation target in my introduction. There are some who say this would boost investor confidence and discipline expectations. Others are saying it would stifle an already fragile economy. What is your thinking, and what modeling are you doing around this?
Well, conversations are going, and as the Minister of Finance stated, that decisions like this should not be made in a haste. We've been working on this, starting with the implementation of the inflation target in 2000, where we stated how this would be reviewed over time. In 2020, the National Treasury decided to commission a macro review. That macro review was done by two former central bank governors of Ireland and of Cyprus. Subsequent to that, additional work was done by the staff of the bank and by both local and foreign academics and some members of staff of the National Treasury. The evidence that we are seeing is that there would be benefits from the lowering of the target. We will receive a report that distills all of this work between the minister and myself, and a decision would be made in due course.
In due course.
I think that what Bongani, just for the benefit of the viewers, three important things. One is that At an inflation rate of 6%, we will have prices double every 12 years.
Sure.
At an inflation rate of 4.5%, prices double every 16 years. At an inflation rate of 3%, prices double every 12 years. And so when you have a conversation with South Africans, you've got to be bringing that to the fore, and you ask, would you like poor people to face prices that are doubling every 12 years at an inflation rate of 6%, double every 16 years at an
Yeah.
inflation rate of
All right.
4.5%, or double every 26 years at an inflation rate of 3%? That's
Governor,
the conversation that you'd have with the South Africans.
Governor, I take your point, but you aren't without your critics. For example, the economist Duma Gubule criticizes our central bank for focusing too much on inflation, he says, at the expense of growth. And he says the real crisis is stagnant growth and fractured policy coordination. How do you respond to that criticism?
It's like accusing the police of focusing too much on crime. Their mandate is to fight crime. The mandate of the Reserve Bank is to go for price stability. And it's a covenant we have with South Africans. It's captured in the Constitution. The Constitution says we must protect the value of the currency because that is in the interest of balanced and sustainable growth. Institutions in society get given remit by society, and they focus on that, and that is what the South African Reserve Bank is tasked with. Our responsibility is price stability, and that is what we do. The modeling work, Bongani, that we have done actually shows that the lowering of the inflation target will actually lead to an increase in economic activity. And why is that so? The point of departure in determining the cost of capital is what the ruling inflation rate is and what we think it would be in the future. By having a lower target, what you then have is to say to price setters and the providers of capital that this is where we are going to be managing inflation. This is our price stability objective, and based on that, the cost of capital comes
Okay.
down. We have already seen that when the conversation started, the cost of government borrowing came down and declined for the first time in a long time to single digits from the double digits that we had seen.
What do you think is the single biggest economic risk you're watching out for in the second half of 2025?
Bongani, I wish I could give you one. There are so many risks. There are risks to the tariffs.
I was being nice. I'm asking
And
just for
what they
one.
would of the tariffs and what they mean for the global economy. And of course, there is a risk that other countries might retaliate. And if the other countries retaliate, you have got this tit for tat that you have, and that would have an impact on the global economy. The second one is that globally, central banks had to deal with the rise in inflation in 2022. And in doing so, they tightened monetary policy. Central banks had been loosening monetary policy. And what we had seen is that since the imposition of tariffs, the US central bank decided to slow down and actually stopped adjusting rates. What that would mean, given that the US has got the largest capital market in the world, is that the cost of borrowing for everyone around the world gets elevated because everybody gets a price
All right.
of what the United States is saying. And lastly, is the geopolitical tensions that we have seen, which impact on the volatility of financial markets and of
Yeah.
commodity prices. And all of these things are all moving at the same time at different paces, and poses a serious challenge for policymaking.
Have you got any good news? I mean, is there any underappreciated area of optimism we should be paying some attention to?
Again, you would say
Interest rates?
one area. I would love to look at South Africa as a great country. We are a country that had conquered adversity when commentators or people outside thought that we would fall apart. We managed to pull ourselves together, and I think that this is an opportunity once again, in spite of the challenges, to pull ourselves together.
How? Which area? Where?
I should not be venturing that because it is more in the
All
areas
right.
of leadership than in the areas of
Not
economics.
even interest rates, eh?
Interest rates is our business, but interest rates are a tool to deal with inflation. With lower inflation, you have lower interest rates. With higher inflation, you have higher interest rates.
It's that simple. All right. Appreciate your time. The Governor of the Reserve Bank of South Africa, Lesetja Kganyago.
Current events, developing stories,
Tough questions.
your voice making a difference.
This is Breakfast with Bongani Bingwa.